Not even gravity can pull you down. You're the wild away from
Oh no!
Distraction is costing you more than time. It's
Give me a second. You've got to be kidding me. Okay, something's just not right. Oh, bloody then. Let's get the ball rolling, shall we, shall we, shall we? Good evening, everyone. My name is James. Hold on. Didn't get this thing rolling. Hold on. Sit tight. Sit tight. Just got to reverse this to make it look right. And come on. Come on. What are we doing? There we go. All right. Who do we have this evening? Hello, hello, hello. And who do we have this evening? Okay. Nobody there yet. Sarah Suzette, how are you? Tammy, how you doing? Michael Corey, good evening, good evening. SAS Home Services, hello. So who do we have over here? We have Chart Dad, Wally. User. Michael Dean, John Bohe, good evening. My Till Business. Okay, Rich Success. John, good evening to you too. Gabino Exono. Okay. Dan. B Money, what's going on? Maze, Agatha. Laundry Arnett. Okay, Laundry Arnett. Spick, Rosa, good evening. Oh, Rosa Corey, good evening. Rando, Fission, Enza's in the house. Detroit Tiger, and Danny. How are you guys doing today? So who do we have over here? We have Joe, we have MSG, Sydney, Trismus. Is that kind of like Christmas, Trismus? Sally, Piper Joe, Marisol, User Tyke, whatever that is. Okay, good evening. Tony the Tiger, Capital, what's going on? Gen Xer. Dude, what's happening? Ivan the Horrible, what's happening, Ivan? Joe in Miami, Bird, High Tech Electric. Eric, Robert, Elvis is in the house. Jerome, Celindo, Dan, Juan, Janine. Wow, a lot of people tonight. Medicare Life. Okay, Juan Chavez, Johnson & Johnson. Let's pull that one up right now while I finish saying hi to everybody. Okay. Where are we? That ain't normal. No, it ain't. Shilpa Turan. Corey, good evening. Jeep and John. R and Van Life. R and Van Life. A nurse, Van Life. Okay. Matt Molina. Ooh, I went to school with a guy named Matt Molina. Pala Malau. Okay. Mark. Superlative back again. I remember you here before. Jimmy D, what's happening? Okay, who is that? Superlative, thank you. 46 sharp. Through Besim. Okay. Crier, Cam, GD. What's going on, GD? Thank you. Eagle 18. Ash, what's going on? AJ. Uh-oh. Ready to Shred wants to take a look at SoFi. I'm going to write that one down. SoFi. Let me finish saying hi to everybody. Selling calls this week? Absolutely. SAR. Uh-oh. We got a newbie alert. Detroit Tiger. 2, is this our year to win it all in the fall? Detroit Tigers, like great basketball team. Michael wants to take a look at Hood. Yo, it's Kaz and Astra. What's happening, Kaz? All right. Sarah, hello. I'm a like. Okay, I liked and subbed. Thank you there, Miss Sarah. Let's get the ball rolling. Today is here. Yep, it is. Okay, that being said, as I said earlier, my name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, show you what I'm looking at, show you how I do it, and hey, if you learn something, great. Awesome. Sarah Suzette, thank you. Alexander, good evening, Alexander. Nice to see you. Okay, that being said, let's get the ball rolling. First one on the list today is Johnson & Johnson. This company's over 140, 150 years old, and they consistently increase their profits year after year after year. So why don't you have this in your portfolio? That's a good question. Why not? All right, let's take a gander. Here's the top, here's the bottom, here's where it was a year ago, here's where we are now. Look at this. Shoots up nicely and pulls back. Not the greatest time in the world to jump into this thing. Take a look. Last 30 days. She dropped, shot back up again, dropped again. Now we're looking for a new bottom. If you like Johnson & Johnson, great. Keep your eye on it this week. As soon as the bottom shows up, me personally, I like 2 days to the upside, and on the third day, I'll jump in because that's what I do. Anyway, no for this week for Johnson & Johnson. Sorry about that. But Ready to Shred wants to take a look at SoFi. Okay. SoFi, so why? Why SoFi? Okay, here's the top, here's the bottom. She shoots up, pulls back. That's a no. It's just dropping. Why do we want to jump into something that's dropping? But if you really like it, check this out right there. Let's zoom into that a little bit more. Let's zoom in. There we go. Drop. We get the bottom last Tuesday. Okay, still falling Wednesday, Thursday. Then Friday is a little bit higher. We have a higher high and a higher low. If that makes sense to you, that's the way to go. Think about it. Do you like SoFi? Me? No, I don't. They don't have any dividends, which makes it kind of awkward for me. I'm enjoying it. Thank you there, Miss Sarah. So Michael wants to jump in and take a look at Hood, as in Robin Hood, as in the company is not old enough to even drive. Think about it. It's not a 20-year-old company. It doesn't have 10, 20, it doesn't even have 5 years of consistent profits. They don't have dividends as far as I know. I could be wrong, but hey, what do I know? But let's take a look at it. Here's the top, here's the bottom. Look at the motion. Up, down, up, down. Looking for that new bottom for Robinhood yet again. Here we go. Last 30 days. We'll be looking at the 22nd. 22nd is right there. Here's your last 30 days. Okay, she shoots up, pulls back, looking for that new bottom. It's not there. So when it shows up, just make sure you're in the right position for it. 30-day top, you got your profit taking. Finding a new bottom, it takes time. Don't be in a hurry. It will come. It will show up. Sarah Suzette, already said hi to you. Alex, thank you. So who do we have over here? Okay, Kaz, I see that. Yo, Alexander, hey, what's going on? Cyber Ninja wants to take a look at Colgate Palmolive. This is another dividend king. Now, a dividend king, if you didn't know, it's got 5 decades. Now, I got to pause for a second to show you exactly what 5 decades means, all right? 1, 2, 3, 4, 5, 10, 20, 30, 40, 50. 50 consecutive years of increasing their profits. Colgate Palmolive. Here's the top, here's the bottom, here's where it was a year ago, here's where it is now. Down, up, down, looking for that new bottom yet again. So, do you like Colgate Palmolive? Okay, here's the top, here's the bottom. Well, what usually happens at the bottom? You cannot get any lower than the bottom. There it is. Now, is it going to go lower tomorrow? Maybe. Is it going to turn around and go back up? Maybe. We just don't know. You got to figure out what makes sense to you, and do you even like Colgate Palmolive? Just one of those questions. Simply Sherry, how are you today? Pleasure seeing you there, Miss Sherry. Oh, thank you there, Jen Clay. Gayut. Chart you're checking is daily time frame or weekly. Terribly sorry there, Gayut. That is an annual. Okay, hold on. Let me just back this up a little bit. Okay, Gayut. This is a 1-year chart, 1 day at a time, 266 data points, roughly. Okay, there's roughly 266 trading days in a year. 4 quarters, 13 weeks per quarter. Here it is a year ago. Here it is on Friday. Okay, Nesha, we just looked at SoFi not even 2 minutes ago. Melanie, how you doing, Melanie? And Kissable, well, hello. Is YouTube desktop open? Yeah, it should be open. All right. Today is my little sister's birthday. Well, outstanding there, little Miss Sarah Suzette. Nice going. Okay, Rob. Rob, I'm a little awkward about this one. The only way I say I'm a little awkward about this, Rob, is Nvidia is not really a good company in my humble opinion. John Bohe, baseball, not basketball. Albeit the Pistons are playing pretty good this year. The Pistons, yeah, that's right. That's that ping pong team. I play sports. I don't watch them. Terribly sorry. As a matter of fact, I went and played soccer this morning. A beautiful game. Lovely, lovely. All right, let's keep the ball rolling. Riley, how you doing? So, Detroit Tigers, see that? Okay, start with long stocks, thank you. So, Rob, you want to take a look at NVIDIA. Now, I'm going to pull NVIDIA up, show you what's looking at. NVDA. Okay, now I do this only because you asked. You ready? Here we go. Here's the high of the year, 211. Here's the bottom, 85. She drops, shoots up, drops, and goes sideways. Now we're at 172. Dropping. Okay. Take a look. 30 days ago, she drops, goes up, pulls back down again. Now, if you like it, fine. I don't like it. Now, Rob, let me explain to you why I don't like NVIDIA. Okay? Sit tight. We're going to venture on over to Yahoo Finance. Now, if you're going to be investing, you really should have a financial website available at your fingertips so you can check out all the details. Now, Rob, I want to show you something. You may or may not like it. Broden L. Washington. I'm a financial advisor just looking to learn. Cool beans. I'd like to hear your input on this. Sit tight. I'm going to be here for about 2 hours, right? So, Rob, let me explain to you why I don't like NVIDIA. Are you ready? Well, number one, let's check this out. Ready for this, Rob? Here we go. I got to do this for a second. You ready? Now, you might not be able to see these numbers, Rob, but I'm going to zoom in for you, all right? Okay, Rob, check this out. This right here, it says the yield. The yield for NVIDIA. $3.92. It wasn't that high last week. Let me show you why. Okay. Now, we're going to take a look at the historical data. Then we're going to take a look at the statistics. Right? Never mind with historical data. We know it's crap. I mean, they pay a 1 penny dividend. Seriously? Why would you invest in a company that pays a 1 penny dividend? I'm looking at the wrong company. I wonder why. NVDA. There it is, Nvidia. All right, let's take a look at some hard numbers for Nvidia. You ready, Rob? Okay, we already know the stock price is 172. 172. Okay, that's the stock price. Now, let's zoom on down and take a look at the revenue. I just saw it. Revenue per share. Okay, Rob, have you checked this out? The revenue per share, this stock cost $172. So how much money do they have coming in? Well, apparently they have $8.86 per share. 8.86. No, it's not 800, it's $8. This company is $172 per share, and they have $8.86 revenue per share coming in. Hold on, it gets worse. Let's take a look at the book value. Okay, book value. $6.47. So, Rob, if the Supreme Court comes out and said, hey, you have to divest and pay back all your investors, give the money back to the shareholders, guess what you're getting for your $172? You're getting $6.47. Because the book value is actually, if you liquidated, yard sale, fire sale, whatever you want to call it, the trash barrels, the broken laptop computers, the broken screens, the pencils, the erasers, anything and everything that company owns. Everything they own. Add it all up together, it comes to a whopping $6.47 per share. That's it. That's all you're getting. And to make matters worse, Nvidia. You ready? There it is right there. Okay, do you see that? You probably don't see that, Rob. Let me make it a little bit bigger for you. Okay. The yield for Nvidia. It gets worse. You ready? 0.02%. Yes, Rob, you're making 0.02% on your invested dollar. That's it. I'm going to say hell no to Nvidia. The numbers just don't work for me. Now, if you're looking for a growth stock, something that's going to grow, fine, Nvidia's your man. But if you're looking for something to hold on to for a safe, predictable income, Nvidia sure ain't it. It pays a 1 penny dividend. 1 penny dividend, $8 revenue per share. And the dividend, 1 penny, and the yield is 0.02. It can't even make 0.5%. It's 2/100ths of a percent. 2/100ths of a percent. That means you need, is that $100 just to make 2 cents? Think about it. You need 100 shares to make 2 cents on your yield. Yeah, no thank you. Anyway, let's keep on going. What do we have here? Yep, got that one right there. What do we have here? Scott, how you doing? That's interesting. Thank you. Hey, 420 Ghost, how you doing? And I like meat vegan eater. Well, alrighty then. Bye, Sarah Suzette. Okay, so no to Nvidia. But Broden, I kind of want to hear what you want to say. Chinese Energy, Detroit Tiger. You got to give me the ticker symbol because I have no idea what that means. Team T go to make a move. Okay, Happy Pickle. Oh, wow, that's a good name. It's the Happy Pickle. Wants to take a look at AT&T. AT&T. Come on, come on. There it is right there. Okay, here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at this. Up, down, up, down, up. 28.31. The 28's going for 59. That's not quite 2%, but it still looks pretty good. So let's take a closer look at AT&T. We all know who they are. They've been around for over 100 years. The question should be, do I like AT&T enough to put some of my money into? And that's a question you got to ask yourself, because I can't tell you what to buy and I can't tell you what to sell. I only pull stuff up and take a look at the numbers and you make your decision. John, we'll take a look at Pulte Group in a minute. So let's keep taking a look at this thing. So I like this and I like that. So let's zoom into this and see, is it the right time to jump into AT&T? Now I want to go back all the way to the 22nd. Here we go. The last 30 days. Up, down, up, down, up, down, up. We get all that space right there to go. It's only about $2 that we're looking for. But remember, I'm only looking for 1%. Remember, a simple, safe, predictable, consistent 1% per week. Yeah, I know that's over 50% per year, but still, 1% of a $28 stock is basically 28 cents. So if I buy it in the morning and this baby shoots up 28 cents, I'm out. That's all I want, 1% a week. So let's take a look at the numbers. Now, I'm looking to do covered calls because they're simple and they're safe. Okay? So a simple, safe, predictable, consistent strategy. I'm about to show you that right now. Invested in Ribbon, and the lawsuit says maybe payoff of $1.86 per share. Oh, I wasn't supposed to laugh at that. Sorry, dude. Ribbon has not been around for 20 years. Ribbon is not consistently profitable. And I honestly don't know what to tell you. Now, granted, it could have been a good possibility, but I'm past the it could have been a possibility. Okay? I'm 62 years old. I'm retired. I'm more for the, yeah, I know it's boring. Yeah, I know it's only 1%. Yeah, I know that 1% a week is 50% by the end of the year. I'm okay with that. So I don't look at companies the same way you do. Now, you probably jumped into Ribbon and say, oh, great, another electric car company. Maybe this will give Tesla a run for the money. Maybe they will. Maybe they won't. I gotta go. My mom says that I have to sleep because of... Oh, no, dude. You're way too young to be here, okay? G. Stott, I'm new. My wife steered me to your channel. I'm curious on what you do, like, and thought on Tesla and the robots and taxis. So you want me to take a look at Tesla? Sit tight. I'll get to that in a minute. And thank your wife for pushing you in this direction. Hope it wasn't too hard. All right, so we're going to do a covered call on AT&T because it's AT&T. And it looks like she's bouncing off that bottom. Could be a good play for tomorrow. So covered call is what we're looking for. All right, which means I'm going to buy the stock at the current price, $28.25, and then I'm going to turn around and get this. I'm actually going to sell it for less than what I buy it for and still walk away with a profit. That and what you like. Okay, sit tight. So let me say that again. If I buy AT&T tomorrow morning at $28.25, I got to stand on my foot pad. It feels so lovely. Okay, if I buy it for $28.25 and then sell it for $28, am I going to walk away with a profit selling it for less than what I paid for it? Let's take a look. Okay, so We're going to do the 28th. There it is. Now, I'm going to show you just one contract, and it's up to you to figure out how many you can do safely. Because think about it. If I'm showing you one, you'll have an idea what one costs. 2,700. Maybe you can do 5. Maybe you can do 15. Maybe you can do 72. I don't know. How much money do you got? But always invest wisely. All right. One covered call, AT&T. The 27th of March. That's just coming Friday. You do realize that not tomorrow, but the week after that starts the second quarter. Wow. Okay. One covered call, AT&T, 27 March, that's this Friday. The $28 call option. So it'd actually be selling it for less than what I paid for it, which, if you think about it, kind of doesn't make sense. But sit tight, look at the numbers, because numbers don't lie. All right, it's called a covered call, meaning it's a very safe trade. Do you remember earlier when I said simple, safe, predictable, consistent, 1% per week? Well, I'm going to explain that all as I go along. When I say simple, I mean it's one of the easiest strategies there is. The absolute easiest strategy is just buying and selling. But there's a minor problem, or should I say a major problem, with buying stocks. You have to wait for them to move. But a covered call, you don't have to wait. I mean, granted, you got to wait until Friday to see if it expires or not, but I get my profit tomorrow. I don't have to wait for the stock to move to get my profit. That's tomorrow. Okay, so here we go. One covered call, blah, blah, blah. Let's break out the calculator because I'm sure you're concerned about what is the rate of return. Thank you about that, John. Calculator, here we go. So, to find out the rate of return, you take the profits. Remember the part where I said predictable? Remember? Simple, safe, predictable? Well, the simple part is it's one of the easiest strategies there is. 2, safe. It's one of the safest strategies also because the federal government allows you to do covered calls in your IRA. There's certain trades you cannot do in your IRA, but this one you can. And remember, I'm looking for 1% every week. So if I could do this in my IRA, and if I have a Roth IRA, I don't have to pay any taxes on my gains. Yeah. All right, anyway. So to find out the profit, we take the max profit, 41, and we divide it by the cost of the trade, including the commissions and fees, to find out the rate of return. Okay, 27.59. Calculator. Sorry, I'm good at math, but not that good. So the profit, 41. Okay, the cost of the trade, including commissions and fees, 27.59. Divide 27.59, and that comes to a grand total of 1.48. 1.48 for 1 week. Think about that just for a second. 1.48 for 1 week, and there's 52 weeks in a year. Imagine that. 1% a week, 52% by the end of the year, if you pay attention and you don't do anything stupid. Now, when I say don't do anything stupid, most beginners lose money by hitting the wrong button. Sorry, it's just a fact. So, I'm going to save this one because I like the idea of 1.48% for 1 week. So this is the first one of the week. Let's get rid of that. Oh no, it stopped working. Damn it. Give it a minute while it warms up. While that's working, let's see what else we got here. I'm going back to the beginning. So we're going to look at something else in a second. Sit tight. There it is. All right, where did you go? I don't know where the heck it went. All right, we're going to go right to here today. We're going to do this, that. That works. Monday is tomorrow. So we're going to do whatever we can for Monday. Let's do that one more time. One more time, if we try. Okay, let's go back. Do it all over again. The 28. There it is. That's wrong. Covered call. 28. There it is. Get rid of that. One contract. There it is. There it is. Okay. Try it one more time. Get it up there this time. There she is. AT&T, 27th of March. Damn it. 28 call option. 41 is the profit. 2,700 is the investment for 1.47. I think it was 1.48. That's what it was. Monday. Here we go. 1.4. Yeah. 1.4. Gotta love it. What do we have next? BKR. I have no idea what that means. All right. Chinese Energy, T, go to make. Yep, John Bohe wants to take a look at Pulte Group. Gotta like Pulte Group. All right, let's get rid of this one. Get rid of that. Back to here. And we're going to take a quick look at Pulte Group. PHM. PHM. Nope. John, wasn't that quick? Look at this. Okay, it takes me anywhere between 3 and 4 seconds to analyze a 1-year chart. Here's the high, here's the low, here's where it was, here's where it is. Look, down, up, down, up, down. It's coming down. Why the hell would I want to buy it as it's dropping like a rock? Never grab a falling knife. Let it fall. Let it fall, hit the bottom, and turn around. Because that's what stocks do. They go up, they go down, they go up, they go down. That's it, that's all. That's it. I wish you reposted on YouTube. I do. Steve T, what's going on? Helic invested in Ribbon, and the lawsuit says maybe a payoff of $1.86 per share. Does everyone see the video mirrored? Hey, the money mask. Yes, they do. Do you know why? Because YouTube and Apple don't really get along very well. So the selfie camera on Apple does not allow me to invert the screen. So if you know, what they call that, an app or some extension that I could, go through, that'd be perfect. But until then, it is what it is. Now, I do live stream on 9 different channels. You just so happen to pick this one, which is on YouTube, which I really do got to get fixed. All right. So, Helic wants to take a look at Ribbon. RVN. That ain't it. RIVN? Okay, here we go. Ribbon. The high, 22.50. The low, 11. She shoots up, pulls back, goes sideways. We're sitting at 14.91. It doesn't really look that glamorous if you think about it. What do you think? Up, down, up, down, up, down. Sorry, brother, I can't help you out with Ribbon. I only buy companies that are consistently profitable. Ribbon is not one of them. Now, you may or may not know, as a matter of fact, let's check it out because it is Sunday, a new week is starting. So let's go and take a look at how many new companies have they added. Well, let's find out. And that would be Finviz. I'm going to go to finviz.com to find out how many stocks there are available. See, here it is, Finviz. Financial visualizations. Great resource if you're looking for stuff. But what am I looking for specifically? The screener. Because the screener allows me to take a look at all the stocks that are available. And guess what? This week, 10,000, hold on, 10,949. That's how many companies are available for us to choose from. That's just the companies. That's it. How many companies do we have? 10,949. That's an awful lot to choose from. Okay, so let's get rid of this. All right, there we go. So you need to make up your mind. What stocks make sense to you? Hi, I don't have much to say. We build portfolios using ETFs, mutual funds, and SMAs. Ouch. Ouch, ouch, ouch. Well, I'm pretty sure that none of your ETFs, none of your mutual funds, and none of your SMAs are going to come even close to 50% per year. Sorry. I know what it's like, because I actually studied for my 65 license. And I'm taking a look at it and it says, why do I need to know about mutual funds? I would never touch them in a million years. So why? Now I understand it, you got to do it for other investors. That's not what I do, and I have no desire to do that whatsoever. But I'm still on the fence. Do I go for my 65 license or do I not? Because it's a lot of work, number one, a lot of useless information, number two, and I don't want that responsibility to, because I like doing what I do. That's it. Uh-oh. Perfect history, amount per share, 0.4383. That doesn't sound good at all, brother. It don't. All right, so anyway, Finviz, 10,949 different companies to look at. I'm only looking at about 300. And the reason why I only look at about 300 companies, because there's only about 300 that are consistently profitable for 2 decades or more. That means dividend kings, dividend aristocrats, dividend champions, dividend contenders, and anything on old Warren's list. That works for me. All right, so let's keep on doing this. What do we have next? Let's get rid of this. Not going to do Nvidia. Can't stand it. But hey, it is what it is. All right. Where am I? Guyute, there we go. Okay, Cam wants to take a look at Carnival Cruise Lines. Yay, Carnival Cruise Lines, the fun ships. I love cruises, I do. I went on 14 cruises in 1 year once. Never mind. It was fun. 14 cruises in 1 year. All right, here's the high, here's the low, here's where we were, here's where we are, up, down. What's going on there? Not really sure. Let's zoom in. Nah, don't look that good because the bottom is here and it's not really going up. It's just going stagnant or channeling. The 24 is going for 109. If you're okay with it at 109. So let's take a look at it. Let's take a look at it at 24. Okay. Covered call right there. The 24 is right there. And just one contract. Let's do this. And here's Johnny. Johnny, tell him what he's won. Well, Bill, today he's won a trip for 2 to Hawaii on Carnival Cruise Line, March 27th, which is this coming Friday, and the $24 call option. So check this out. If I'm buying it at $24.12, selling it at $24, how can I possibly be walking away with a profit? Let's check it out. Because the premium on the covered call is whatever the hell it is. I forget what it is. But let's check out the numbers. And for that, we need that crusty old calculator. Here we go. The profit, 108. 108. And we're going to divide that by the investment that we need to come out with to secure 100 shares of the company. Because if you're going to do a covered call, you do need 100 shares of stock in order to sell one covered call. But think of it this way. You're not buying shares. You're not investing in a company. You're creating what I like to call a weekly cash producing asset. Okay? So the cash producing asset is going to cost me $2,300. All right. This week, the cash producing asset is going to give me $108. But here's the funny thing about that. Friday's coming whether you like it or not. So if it goes above the 24, I get all my money back and I get to keep that profit. So it's not really a risk. That's kind of like someone saying, you know what, I like your vending machine. Let me buy it from you from the same price you paid for it. You keep the change. So that's 108, which is that. And, oh, I got to divide that out. Getting carried away with myself. 2292 divide 2292. Now, I'm not 100% sure about you guys, but I feel gypped. I do. I feel gypped because the weekend's over already. And I got to do this all over again. Don't get me wrong, I enjoy doing this. I like standing here sharing with you guys. But I was really looking forward to relaxing for the weekend. We did take the boat out on Saturday, Thursday and Saturday. So we took it out twice this week. So that was kind of fun. All right, here we go. 4.7. Hell no. How can I buy a stock? $24.29. Turn around, sell it for less than what I paid for it, 24 call option, walk away with 109, and the 109 being 4.7% for 1 week. Now, if the stock drops below the 24, I still keep this profit, and I get to sell it again to someone else next week. Because think about it. A vending machine, you plop it on the corner, 1st and Main, okay? 1st Street and Main Street. Plop your vending machine there. People come by, feed it dollar bills all day long. You come by at the end of the week, boom, there you go. Empty it out, take your 108, go on a shopping spree, whatever. And then next week, you got that burden of doing it all over again. 4.7, yeah, I'm going to save this one. Save a 4.7. Hell yeah, here we go. 4.7, why not? Carnival Cruise Line. Let's do this. Good pick there, Cam. Where are you? Where are you? Come on, come on, come on, come on. There you are right there. You beautiful, sexy beast, you. There it is. Carnival Cruise Line. Carnival Cruise Line. 27 March. $24 call option. So I'm buying it at $24.29, selling it for $24, still walking away with $108. And it's only costing me $2,300. Yeah, I know. It's over a 4% return for 1 week. If you liked it, it's always going to come down to that. I'm terribly sorry. Terribly, terribly sorry. I don't know how to apologize enough. If, and only if, you like this company at that price. Because ultimately, the choice is yours. It's your money. You have to put it where you think is right. I tell anybody getting started, paper trade first. It's free. It doesn't cost you anything but your time. Once you learn it, think about it. Once you learn a strategy to get you 1% every single week, 5 or 10 minutes a day. That's it, 5 or 10 minutes a day, 1 hour a week. 1 hour. 1 hour of your time is equal to 1% of your assets that you're trading. So if you're trading $100,000, 1 hour of your time is now worth $1,000. 1%. All right, anyway, let's go. So yeah, I like this one. 4.5. What the hell was it? Whoops. There we go. 4.3. Yay! Woohoo! 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 Okay, what's next? Next. Gayute. Taco Eater, what's going on? 80 Campos, what's going on, bro? Raymond, was that right? Raymond, was that you? Raymond, what's happening, Raymond? Shuja, what's happening? Emmanuel, can I take a look at Coca-Cola? Woohoo! Now, don't get me wrong, Coca-Cola is one of the top companies there are. However, they don't really have great premiums. I think in my 30 years, I may have bought Coca-Cola twice. I think I bought Johnson & Johnson twice. Can you imagine? 30 years. 30 years, I bought Johnson & Johnson, cream of the crop, maybe twice. Coca-Cola, maybe 2 or 3 times. Pepsi, at least a dozen. Because Pepsi's numbers are just better than Coca-Cola. Sorry. Here we go. All right, there's that. He wants to take a look at Coca-Cola. Come on down. Here we go. There you go. The next contestant on Let's Make You Hell No. What is that? Look at that. Drop. It's going to be the exact same thing as those other stocks we looked at. Here's your high of the year. Now she's dropping from grace. Now we're looking for the bottom. If you like Coca-Cola, keep your eye on it this week. The bottom is going to show up. Okay, now tomorrow, it could be higher. It could be lower. We just don't know. Do you like it? Yes or no? That's all there is to it. What do we got? Dan, newbie alert. Now, Dan, I say you're newbie only because if you've been here for a while, you know there's no way in hell I would be looking at JEPQ. It's just not consistently profitable. Just no. But let me show you why. JEPQ. Okay, reason number 1, she's dropping. No, thank you. Reason number 2, April, May, August, November, January. I don't do monthlies. The numbers just don't work in my favor. No. Let me show you why else I don't like JEPQ. This is a bigger reason than the other ones. JEPQ. Now, I'm going to take a quick look at JEPQ. You ready? Okay. JP Morgan, NASDAQ, Equity, Premium Income, EGF, JEPQ. Yay. No yays there whatsoever. Okay, so we want to take a look at historical data way over here. Now, what am I looking for specifically in historical data? Historical data is going to tell me exactly how much money have they made consistently. Now, here we go. We can look at the historical prices. Nope, don't want to see those. I want to see the dividends. Now, the reason I want to see the dividends is pretty simple. And I want to see all the dividends. Okay, the reason why I want to take a look at the dividends, because the dividend is a portion of the company's profits they give back to us, the buyers and sellers. We are the investors. We buy the stock. We are the investors. We are entitled to our share of the profits. And that, my friends, is the dividend. So if the profits increase, guess what? So do the dividends. If the profits decrease, so do the dividends. So as the dividend increases, it means the company's more profitable. As the dividends decrease, it means the company's losing money. It's actually that simple. If it goes up, great. If it goes down, not so great. So let's take a look at the 20 years. Remember I said 2 decades? 2 decades is 10, 20 years. So let's take a look at the 20 years of JEPQ. You ready? Some of you already know where this is going, because JEPQ is only, 4 years old? The very first dividend, JEPQ, June 1st, 2022. This thing's only 4 years old. You're putting your money in a 4-year-old company. They haven't even got past the growing pains yet. Haven't even settled into their groove. And you're putting your hard-earned money into this thing? Okay, hold on. I'll give you the benefit of the doubt. Let's take a look at how wonderful the profits increase on JEPQ. Oh, I can't even keep a straight face with that one. Let's take a look. You ready? Here we go. The very first dividend, June 1st, 2022, 37. Okay. The first one's 37. Second one, lower, higher, higher, lower, higher, lower, higher, lower, lower, higher. Hold on. It gets worse, but think about it. 1, 2, 3, 4, 5 times it went up and 5 times it went down. What kind of progress is that? Up, down, up, down, up, down. No, no, no. 1, 2, 3, 4, 5 times it went down. Okay, this is April 2023. Okay. Higher, lower, higher, lower, higher, lower, higher, higher, lower, lower, higher, higher, lower, higher, lower. This company can't make up its mind. It's like a 50-50 shot. It goes up, it goes down. It goes up, it goes down. Now, I'm not going to continue with this for the rest of the time frame. It's just a no. It's like I feel bad anytime anybody asks me about JEPQ. There's a whole handful of them. There are. And I can tell the newbies when they get here because they ask me about stocks that are definitely a flat out hell no. All right, so you guys here on TikTok, we're going to reboot this one. Vacation, how are you doing today? So vacation, let me ask you a question. 1.48 of what? Does it really matter what my account looks like? I'll put it to you this way, all right? If I have $100, 1% is 1%. If I have $1,000, 1% is 1%. If I have $1 million, 1% is 1%. 1% every single week is over a 50% return by the end of the year. So why is it you need to know what that number is? Think about it. Because if you got 20 grand, 1% is $200. If you got $200,000, 1% is $2,000. 1% is just 1%. It's a number that I use to maybe not make people feel so bad. Because I'm 62, I got about 6 figures, okay? Now, that makes me a nice rate of return on a weekly basis. But I'm 62. I got 5 decades of work behind me. My first job was in 1974 before some of you were even born. So you can't compare yourself to me, but you compare yourself to what you could be. Now, if you only have $10,000, well, great. It's going to take you a while to get to a substantial amount. It's going to make a big difference. But I hate to be the bearer of bad news. Time is going to pass whether you start now or whether you start in 5 or 10 years. It doesn't really matter when you start. You got to start somewhere. That's it. All right. So we're going to reboot on this one here. Okay. So for you guys that are here, make sure to, sign back in after I reboot this thing because those numbers look terrible. I do this once in a while. Got to reboot. Hey, lovely. Thank you for that. Okay. There's good old Nick Shirley. Live. Here we go. And we should be live any second now. All right. There it is. Let's twirly this around. Twirly, twirly. There you go. And there you go. Sorry about that. Hey, Freckle Queen. First one to jump in. How you doing, Freckle Queen? Back again. Jake, I see you there. So I'm not even going any further with JEPQ because it is part of a handful of companies where they just market the hell out of it and ram it down your throat and say, hey, buy this, it's good for you. Well, maybe it will be, maybe it won't. But if a company goes up, down, up, down, up, down, up, down, up, down, down, up, down, up, down, that doesn't work for me. I want a company that is consistently profitable year after year after year after year. And if you don't know what that looks like, let's check this out. You ready? Let's take a look at a company that has been consistently profitable for, you ready for this? 6. Or is it 7? Anyway, 6 decades. You ready? Let's take a look at this. All right, you ready? Here we go. Let's get rid of those. All right. Who came up with JEPQ in the first place? He's gone now. Rosa, NVM. Oh, no. Rosa, I don't do NVM. No, 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 no. Okay, yep, we did that one. Ra, we're going to take a look at SPY in a second. I don't know why. Ra, you probably don't look at these numbers either, because SPY is not consistently profitable. For me, that's a no. What the hell are you thinking, putting your money into something that's not consistently profitable? It makes no sense. Why would you invest in something that's not profitable? Okay, PJ, we'll take a look at that in a second. All right, let's zoom in. Back to 2006. Right here, March 2006. Are you ready for this? Follow the bouncing ball. Are you ready? Here we go. Whoops. Here we go. 2006, 33, 36, 39, 40, 41, 45, 49, 53, 57, 61, 65, 67, 72, 76, 79, 81, 89, 95, $1, 103, 106. Did you notice every single year the dividend went higher, 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 and higher for 6 decades? That is what I call consistency of profitability. Yeah, and there's about 350 companies that do exactly that, consistently profitable. Anyway, PJ wants to take a look at ACI. I have no idea what that is, but let's take a look. ACI. Albertson. Oh, we looked at this last week. Okay, here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at this. Up, down, up, down, up, down, up, down. It's actually coming down at the moment. The last 30 days. Down, up, down. Just missed it by a week or two. Right there is your opportunity. But don't worry, she might show up again. Might be good to short Carnival due to the people spending all their extra money on gas soon. All right, thank you for that. Corey B. You be lucky to make 6% in a mutual fund. I hear that one too. I wouldn't touch a mutual fund with your money. That's a problem I have. That's the problem I had with that E60, that Series 65 license. They want me to learn stuff that I'd never touch in a million years. Ooh, nice question. All right, so we got a question over here, and this is a good question. I'm going to get to that one second. Where is the other live? Okay, we got 9 different channels. 3 on YouTube, 2 on TikTok, Twitch. What's that one right there? Zoom, Rumble, and we're like 5 people short. 5. We got 995 followers on LinkedIn. I forgot LinkedIn. Well, 995 followers on Instagram. So we need 5 more followers on Instagram to be able to live stream on Instagram. So, if you don't mind. Anyway, so here we are. Oh, I gotta erase that. So, up, down, down. No. Sorry, just didn't work. Sorry, Juan, PJ. So, good question. Tuna Guy. Thank you for that, Tuna. All right, user 329160 has a great question. When you sell for less than what you purchased, then don't you have to subtract from your profit? You are absolutely correct. Let me educate you just for a smidge. Mr. G, sit tight for a second. So let's go back to that one we were looking at, AT&T. Okay. Now, user 329160, if I buy it at 28.31, and I sell it for 28, you're correct. I'm losing 31 cents. Right there. What am I collecting? I'm collecting 59. So if I take 31 from the 59, now I'm walking away with 28, which is over 1.4%. That's where I got the 1.4% from. That makes sense? User 329160. When's your parents name you Tom or Bill? But think about it. Okay, if I buy at 28.31, I sell it at 28, I lose 31 cents. But look at the premium I'm collecting. 59 per share. You take the 31 off the 59, and I'm still walking away with 28. And 28 is 1.4% of 28. Is that right? Yeah. Well, anyway, the computer calculates it all out for me. But thank you. All right, what do we have next? Mr. G, USOY. He's got 3 question marks behind it, and I'm probably thinking to myself, yeah, I'd have 3 question marks behind that too. Big drop too soon. ST, can you explain briefly? ST, seriously. Big drop soon? Okay, you do know there's 10,949 different companies. Which one's dropping, which one's not? Twisted Pasta, what's happening? Okay, Mr. G, USOY. USOY. Defiant Oil. No. Mr. G, April, May, June, September. I don't do monthlies. They just don't work in my favor, so I never do them. Sorry. Jamie Thomas, how you doing? Thank you. Dr. Zeus, oil. You got to give me a better one than that. You actually got to give me a ticker symbol because there's so many oil companies out there. Thank you, Zam. Kissable. I can't see the screen on YouTube either. Well, let's see if we can do this. Whoops, don't need that. Uh-oh. Oh, yeah. I think Jacob moved everything. Damn it. Okay, well, let's go to YouTube then. Sit tight. I'll find it. Ooh, we only have one on YouTube. And that is... Find it. That one. Ooh, we only have one on YouTube. Okay, so let's get rid of this one. That is. Let's do this over again. Let's stop streaming here, and then we'll restream again, see if it pops up. Thank you for showing that. Stopping the stream. Come on. Come on, come on, come on. Now touch me, baby. Can't you see that I am not afraid? What was that? I like meat vegan. Okay, thank you. Kissable, give me a second. It's stopping the stream at the moment. I gotta wait for it to fully stop before I can start it again. So what do we have over here? Oil. Enza! I wondered that too. Thank you, Enza. Super Steve wants to take a look at Nike. We'll take a look at Nike in 1 second. Alrighty. Jamie, how you doing? Carlos, thank you. Alexander, Visa, 1 second. Why is that taking so long to stop? All right, we'll give that in a minute or two. We're going to take a look at Super Steve, Nike, N-I-K-E. Here we go. N-I-K-E, Nike. Got to turn the fan on. It's getting a little warm in here. All right. Nike? What do you mean you can't find that symbol? Don't give me that crap. NKE. NKE. Nike. I thought so. I spelled it wrong. All right, we're going to say no to Nike this week. Sorry, dude. Who came up with that one? Super Steve, check this out. 69 drops down to 52. Looking for the bottom. Okay, keep your eye on it. It's going to show up tomorrow, the next day. Nick, of course, but it's safer to say it will expire in the money guaranteed profits. Thank you there. Who was that one? Nick. Thank you there, Mr. Nick. Yeah, it makes sense. Okay, user 32916. Oh, dude, back again, huh? CVS? CVS? No. Again, same scenario. Dropping, dropping, dropping. Looking for the new bottom. It may pop up tomorrow, the next day, or the next day. You never know. BE, that's something, and it is an energy stock, that much I do know. Bloom Energy, that's what it is. Well, that's interesting. Take a look. The high, the low, where was it? Where is it? Look at this. Up, down, up, down. What's going on here? Let's zoom in a little bit closer to see if it makes sense. Here's our last 30 days. Up, down, up, down. What's going on there? You see, that makes me a little leery because it is going up. But we hit a high here on Friday, but we also got a new bottom, and it closed lower on Friday. So I'd wait a little bit longer. Thank you, that mighty bargain. I like that song. Mudbone. I'm not quite sure what LKSNAY means. Like snay on the singing. You don't like my singing? Well, that'll be the day when you say goodbye. Visa. Let's take a look at Visa. Ooh, ooh, wait a minute. Look at that right there. The high, the low, where was it? Where is it? Up, down, what's going on there? Looks like it's just turning. It is actually turning around right there. Last 30 days, check it out. Okay, down, up, down, up. However, let's zoom into that a little bit closer so you get a better idea. Okay, let's try that streaming one more time. One more time if we try. So Visa's at $300. Okay, drop. Now she's going back up again. Here's the bottom right there on Thursday. Friday was higher. However, I don't jump in with just one day. Okay, so Thursday is the new bottom. Okay, Friday is higher. Now, I like 2 days to the upside, so that could be Monday, and then maybe Tuesday I would jump in. But that's me. You got to figure out what works for you. So, Visa, 301. They don't have a 301, but they do have a 300. And after all, you know I like safety. So if I buy it at 301, yes, I know I'm losing $1.62, but it's paying 5 1/4, which means you take the $1.62 off of the 5 1/4, and I'm still walking away with 1.5% maybe. Well, let's take a look, because I do like me some Visa. Don't leave home without it. Wait a minute, that's American Express. All right, let's get rid of this. Change this to the covered call, and we are looking at the 300. There it is. One contract. You got to figure out what is on your list. How much can you afford safely? So here we go. One covered call, Visa, 27 March. That's this coming Friday, five days away. The $300 call option, $391 is my profit. Don't get too excited. It's going to cost you $29,000 just to jump into that position. But here's the thing. Most people just starting out got to start out with $2 stocks, $5 stocks, $10 stocks. At a certain point, when you get, more money behind you, then you move up to the $200, $300 stock. This is a $300 stock. Can you afford $300 per share? Well, let's find out what these numbers look like. Clear that. The profit, $391. We're going to divide that by the investment, 29,609. There you go, 1.3%. Did you see that? 1.3. Now, we were getting 1.4% on a $1,200 investment. This is a 1.3% on a $30,000 investment. 1% is 1% no matter which way you look at it. Granted, we're making $391 off of one contract, but that one contract is costing us $30,000. Do you remember the other stocks we looked at? They were giving us nice rates of return. 1.3. Hold on, I'll show you in a second. But this is Visa. Different game. Okay? Visa, 1.3. There she is right there. One covered call, Visa. 27 March, that's this coming Friday. The $300 call option. Look at the price of the stock, $302, $300.02. So I'm selling it for the same price I'm paying for it, and I'm still walking away with $391, and it's 29,000. So yeah, 1.3%. 1.3. So AT&T, right? AT&T was 1.4%, and it was only a $2,700 investment. Visa is 1.3%, and it's a $30,000 investment. It's just a numbers game. Don't be scared about the numbers. That's all it is a bunch of numbers. What are you making? I'm looking for 1%. All right, next. We already looked at Visa. We already did that. BP Bahare wants EME. Dude, I've never heard of that one. Let's take a look. EME. Back to there, back to here. EME. Never heard of it. That's why I don't do monthly. April, May, June, July, October, December. No, no, and no. Sorry, BP, you've been here long enough, dude. You know that. Mr. G, USOY is weekly. Shall I invest more? Hold on a second. I don't tell anybody what to buy, what not to buy. Okay? But we did take a look at USOY. Okay? And USOY is a monthly. April, May, June, September. I don't do monthlies. The numbers just don't work for me. Now, I'm not telling you guys to do it. It's just a waste of my time to take a look at it, because if I do, you're going to see the numbers, and I'm going to say, no, because look, it's at $8.99. Great. Yay. $8.99. Last 30 days. That's what it looks like. Number one, I never buy at the high of the year. Number two, I never buy monthlies because the $9 is giving 45 cents. Okay, that's 5%. But I got to hold it for 4 or 5 weeks. Okay, a little more than 1% a week. Great, wonderful. However, if I'm wrong, the one strike out of the money is paying 0. 0, 0. No. And then look at this. Okay, let's move this out of the way so you can get a better view. Just so you can get a better view. Are you ready? This here is 30 days ago. This was Friday. Up, down, up, down, up, down, up, down, up. Great. There's your 30 days. Now tell me, where do you think it's going to be in the next 30 days? I just don't do monthlies. It's hard enough trying to figure out where it's going to be in 5 days, 30 days. No, thank you. And then most of the time, this never gives me 1% a week. So I just don't do monthlies. They just don't work for me. Mighty Bargain, Doors, great song. I like that. Don't you love her madly? Wanna be her daddy? Don't you love her ways? Tell me what you say. Don't you love her as she's walking? Victor! Okay, Alexander, we already looked at Visa. Mudbone. Carnival Cruise Line hasn't found the bottom. That's not what I said. I did not say I like it. Let's take a look. CCL. Okay, the bottom for Carnival Cruise Line was right there 2 weeks ago. Okay, she dropped, went back up, back down, but she stayed higher than this. So the bottom is 2 weeks ago. There's your bottom for Carnival Cruise Line. She went up, down, up, down. So she's kind of going sideways at the moment or channeling. Okay, PJ, Humana, HUM. Now, I do own some Humana, just in case you're wondering. Here's the top, here's the bottom, here's where it was, here's where it is. Look at this, down, up, big drop, kept on going. What's going on there? Let's zoom in. Oh, hey, yeah, send me a DM, brother. Okay, send me a DM with your number. I'll give you a call personally. Arthur Jr. Ooh, old school. Now, Arthur Jr., you're thinking old school, where people invest for annual returns. No, Arthur, we're looking for 1% every week. So, Arthur, 1% every week is 52% per year. That's simple interest. If you compound, it's like 67. But I say 1% a week is about 50%. If you like it, it is. Arthur. So you're new here, so just chill. Don't do anything crazy. Just chill, okay? Thank you there, PJ. So PJ wants to take a look at Humana. Okay, what's going on here? The 160, the 170s. Look at that, the 170s, 420. If you like Humana. And it's always going to come back to the last three or four, 5 questions. Okay, question number 1. Always. Does it make sense? That's question number 1. Question number 2, do you like this company, Humana? Either you like it or you don't. Question number 3, do I like Humana at this price, $169.90? You either like it or you don't. Take a look at the chart. The chart will tell you a lot. A year ago, Humana's at 270. Drops to 210, shoots up to 320, drops to 160. That's where we are right now. You either like it or you don't like it. Okay, I got 5 simple rules. Now, for those of you that are new here, you may or may not know this, but the trading strategy I'm giving to you this evening was created for my 9-year-old daughter. When she was 9, she said, "Daddy, what are you doing?" "Daddy, what are you doing? Can you teach me?" So my 9-year-old daughter says, "Can you teach me?" Now, most adults don't even understand the stock market, and I'm supposed to teach a 9-year-old. All right, so teaching a 9-year-old, it's got to be simple. It's got to be safe, predictable, consistent, and no way for her to lose. That number 5 one always gets people. So that's the 5 criteria. So I came up with 5 simple rules. Rule number 1, never buy anything you don't understand and you don't want to hold on to. If you don't understand it, don't buy it. If you don't want to hold on to it to the day you die, don't invest in it. That's that simple. You don't know it, you don't understand it, don't buy it. That's simple. Rule number 2, never sell at a loss, because if you sell at a loss, you weren't paying attention to rule number 1. Rule 2, never sell at a loss. Rule number 3, make sure the company is consistently profitable. Now, we talked about that a little while ago. Consistency of profitability, higher and higher and higher profits year after year after year. Rule number 4, weekly options only. I'm 62. I do not want to sit in front of my computer looking at this crap all day long. I did that when I was younger. Nowadays, I'd rather go outside, have a nice cold drink, sit under the gazebo, and just watch the birds and the bird feeders. Terribly sorry, that's what us old folks do. After 5 decades, that's a half a century of working. I've worked 5 decades. 1974 was my first job. 5 decades. I'm entitled to sit down and do nothing. Not that I do that. I mean, I'm busier now than I've ever been. Not the point. Mudbone, Cotton Express. I'm incognito. Nicely going. Yes, you did. You said I like Carnival Cruise Line. No. I said I love Carnival Cruise Line. I also said I've been on, was it 14, 13, 17, 17? Yeah, Mudbone. I did say I like Carnival Cruise Line. The cruise line. I went on 17 cruises in 1 year, is what I said. Okay? Now, I also said Carnival Cruise Line right here. Okay? Now, I do like Carnival Cruise Line at 24. And at 24, it's giving me over 4%. So why wouldn't I like Carnival Cruise Line? Okay, I didn't say I was buying it. I said that I liked it. Okay, how do we screen for consistency of profitability? Okay, Johnny, are you ready? I hope you got a pen. Pen, pencil, crayon, mascara, lipstick. I don't judge, Johnny, but here we go. You ready? Dividend kings. Dividend aristocrats. Dividend champions. Dividend contenders. And anything on Warren Buffett's list. Those 5 lists right there will give you 350 to 360 different companies. That's it. Oh, hate. Can you go slower or go more into detail in the chart analysis, please? Oh, boy. Chart analysis slower, you say. All right, you ready? Your Honor, the witness is lying. Thank you there, Mudbone. Okay, so more detail in the chart. You ready for this? Here we go. The high of the year. The low of the year. Where was it a year ago? Where is it now? And what is the motion of the ocean? She went down. She went up. She went down, she went up, she went down, she went up, she went down. That's it. Now, jump into the 90 days. Anytime I look at a chart, the 1 year chart first, takes me 3 to 4 seconds. High, low, was, is. That's it. 3 months, the 90-day chart. Here we go. Same thing. The high, the low, where was it? Where is it? The motion of the ocean. Up, down, up, down. That's it. And then I go to the 30-day chart. The last 30 days. The last 3 months. Same thing. The high, the low. Where was it? Where is it? Up, down. That's it. I don't know how much slower you want me to go. I look for 5 things. The high, the low, where was it? Where is it? And what is the flow? Up, down. That's it. Can't go any slower than that. Mudbone, you're out of the light. The witness is lying. Thank you there, Mudbone. All right. John Bahay, Jim, can we look at a potential double bottom to see where the potential move up is predictably? John, you got to give me a ticker symbol. I mean, how am I supposed to find a double bottom just by the top of my head? Here you go, John. Here's a double bottom. One there, one there. Down, up, down, up, down, up. Double bottom. Once there, once there. I don't know what you want, John. Really, I don't. Because I don't know them all the time off the top of my head. Johnny, Dividend Kings list 20 plus years of more dividends. Thank you there, Mr. Nick. Rosa, Bank of America. But of course, young lady. Rosa wants to take a look at Bank of America. And no, it's not BOA, what you'd think it would be. It's BAC, which is kind of weird if you think about it. But here you go. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Okay, she went down. She went up. See what down? Look at that right there. Rosa, this is a good pick. Look at this one right there. Cool beans. Last 30 days, Miss Rosa. Right there. 30-day high, 30-day bottom. She drops like a rock, back up. She's bouncing off that, the 47. The 47 is paying 96. That's almost 2%, right? Well, let's take a gander at it. So let's take a gander at Bank of America. Okay, Nana Saki wants to take a look at Micron. We'll take a look at that in a minute. Let's finish up with Bank of America. Bank of America's at 47. The 47 is right there. Whoops, no. There we go, 47, right there. Okay, one contract. Here we go. And here's Johnny by one covered call, Bank of America, BAC, 27 March. That's this coming Friday. The $47 call option. Now take a look at the current price, $47.15. So yet again, I'm selling it for less than what I'm paying for it, picking up 82, investing 46. What rate of return is that? Let's find out. Calculator, if you please. Profit, 82 bucks. Cost of the trade, see, max profit, $82. Cost of the trade, including commissions and fees, $46.18. Okay, divide 46.18, grand total of, you ready? 1.77. Okay, if you like Bank of America, it's always going to come down to those last couple of questions. Do I like Bank of America? Do I really want to put my money into Bank of America? You either do or you don't. It's actually that easy. Come on. Oh, that's 3. This is number 4. And how much was this one? 1.7? 1.7. Okay. Bank of America. Here we go. There it is. Bank of America. One covered call, Bank of America. BAC. BACATION in the summertime. Okay, the 47. 82 bucks is the profit. 4,600 is the investment for 1.7. Okay. We got room for one more. What time do we got? 1.7. One more. We got a half hour to go to find one. What do we got? Thank you very much. Nana wants to take a look at Micron. All right, Nana, let's take a look at it. Back to the beginning, because the beginning is always a great place to start. MU, Micron, no. Sorry, kiddo, no, I don't buy at the high. Look at where it is. No, thank you. That's just a no. Sorry. What does that one tell you? Arthur Jr., which one we talking about? Hold on. That is that 1% a year. Yeah, okay, thank you. Okay, oh, hate. Now, oh, hate, you're new here, so if you want to have a chat, you want to have a conversation, that goes with any of you, okay? It's like 9 different platforms here, so 9 different channels. Anybody want a conversation, you can go to the website, which should be in the bio. No matter what channel you're on, there is one somewhere. So find the website, the10minutetrader.com, and either book or call or just DM me from wherever you are. Your phone number, I'll give you a buzz. Okay. All right, you're right. What does that one tell you? Okay, Arthur, I'm not 100% sure which one you look at it. PJ wants to take a look at Wendy's. PJ, come on. You know Wendy's is a monthly. No, it's weekly. Holy cow, they've changed. Right, they used to be a monthly. Way down there. Look at that. The high, the low. Look at that. Just dropped like a rock. Went from 15 down to 7. That's a 50% drop. But look at that. Bottom is here. She went up, back down. 1, 2. There's your 2 days right there. Let me zoom in a little closer so you can really see it. Okay? The top, the bottom, 1 day up, 2 days up. So if this thing goes above 709 tomorrow, no. And the reason why I'm saying no is look at this. 1 strike out of the money, 0. 0 is 0. The premiums are horrible. Sorry. Sorry, PJ. The premiums look terrible. If the stock goes down, you're going to get nothing. You're missing the chart channel tonight on YouTube. Am I? I just did it 2 seconds ago. Nope, it's there. See, you got this one, and you got that one. Both of them are live and live. They're both there tonight. Berg, the investor. Berg, how are you doing today? All right, all right. So what do we have down here? That one's done. That one's done. Mary Mercer. Thank you there, Mary Mercer. Kissable. Ooh, WMB. Williams. I haven't done Williams in quite a while. WMB. Williams. Ooh, sorry, kiddo. Look at this. Here's the bottom. Shoots up. Now she's pulling back. She's actually pulling off that top. Okay? Shoots up from 65 to 77. Now she's dropping. Sorry, kiddo. Not this week. What do we have here? Here. Okay. Nana, what about inflation? Okay. See, Nana, if you're making 50% per year, why are you worried about inflation? It's an interesting question. BP, thank you. ME. Okay, no options on ME. Sorry, dude, new. EME, we looked at already. Dr. Corey, hey, take a look at ARM. ARM. Okay, Doc, I'm not 100% sure what you're seeing there because I'm not seeing the same thing you're seeing. Okay, that big jump up on Friday to a new 30-day high, yeah, no. Not for me anyway, okay? You know I don't tell you what to do. You do your own thing. Simone, what's happening? Oh, Swanee wants to take a look at SOC. Never looked at SOC before. SOCK. Really? It's SCKT. Okay? So, SOC is going to be a no because there's no options. Sorry. Simone, TSLL. New bottom there, kiddo. Sorry, Simone. Drop. Looking for the new bottom if you like TSLL. Swanee, SOXL. Direxion Semi 3F new. What is that? Up, down. What's going on there? Let's zoom on in, see what that looks like. Top, bottom, up, down, no. It just doesn't look right. Look, here's the top, here's the bottom, shoots up, back down, back up, back down. No real direction. Okay, now the chart will tell you exactly when to buy, and this was the chance to buy right there. Came and went. It's just going nowhere at the moment. All right, thank you there, Enza. BP, thank you. Super Steve, it's up on YouTube. Yep. Enza, we're looking at Verizon. Ooh, user 329160, back again with another one. Dell, I love me some Dell. I do, I do. No. Okay. Now, Super Steve, user 329160, you're relatively new here. I don't buy anything at the high. And do you remember earlier I said, rule number 1, never buy anything you don't understand? If you understood Dell and you knew what Dell was doing, you would know that it's at the high. And I don't buy anything at the high. Danny, IBM, why not? International Business Machines. Uh-oh. What's going on there, Danny? Down, up, down, up, down. Nope. Sorry. Wrangler, WF. What is WF? Worry Financial. No options. Sorry, kiddo. No options, no thank you. What do we have over here? Can we look at IBM? We just did. Jim B, what's going on? WFC. Ooh, Wells Fargo. I love me some Wells Fargo. I do, I do. 100 years old. Check this out. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Down, up. Down, up. Almost perfect. Look at that. 77. I'd be definitely going for the 78s. 123. Not quite 2%, but still not bad. Let's take a look at it. Last 30 days, how can you go wrong? Top drops here, 1, 2, 3, 4, 5. 5 days up. Look at that. You can't beat that. Here's the top at 95, drops down to 74. Now she's back at 77. Look at all that space. So the 78's 123. Here's number 5. I can feel it. Number 5, here we go. Covered call, the 78s. Get rid of that. 1 contract. Here's Johnny. Tell him when he's won. There we go. 1 covered call. WFC, Wells Fargo, 27 March. That's this coming Friday. And it's the 78 call option. Look at this. The bid, the ask, the bid, 77, 70. Well, that's not right. 77, okay, whatever. 180, 76. $100. Let's find out what that is. Ooh, oh my goodness. Put my knee up on here. That's going to hurt tomorrow, I tell you that much. Yes, I know, I went and played soccer today. I probably shouldn't have, but you know what? I have no idea how many games I have left. All right, so profit 180. Ooh, shit. That is going to hurt. We're going to divide it by the cost of the trade, including commissions and fees, is $76.20. What does that come to? $76.20. Grand total of 2.3. All right, 2.3. All right, 180. Okay, I like that one. I'm going to save that one. 2.3%. Why not? And that's it for today. That's all 5. Took us a while to get that last one. Wells Fargo. Was it 2.3? Was it? There it is. One covered call. WFC, Wells Fargo. The 27 March, that's this coming Friday. The 78 call option. 76 is the profit. No. 180 is the profit, sorry. And 7,600 is the investment for a 2.3. Oh, wow, 2.3. $2.3. All right, so let's run down really quick. We got 18. Let's do it this way. Nice. All right. We got AT&T, 1.4%. Carnival Cruise Line, 4.3. Thank you there, Mudbone. 4.3. Visa, 1.3. Bank of America, 1.7. Wells Fargo, 2.3. Okay, that works for me. Now, it is 11:40. let's answer some questions. We just find our 5 stocks for the week. I cannot ever find any at the right time that fit all the criteria except my favorite, AT&T. Simon Hafner, greetings from Switzerland. Ooh, Switzerland. How are you doing today? All right. Mudbone, thank you for that. Dr. Corey, thank you. All right, so what do we have over here? Wow. Okay, I think we're all out of questions. What else do you guys want to take a look at? Anything? No, Danny, we can't. Yeah, we already looked at IBM. What else do you guys want to take a look at? We can call it a day. We can. Ooh, no, we did not look at Macy's. I love Macy's. I do. Macy's. Macy's. Let's take a quick look at Macy's. Okay. Let's take a, whoops. Hit the table. Macy's. Here we go. The high. The low, where was it? Where is it? Look at it. Down, up, down, up. Okay, that looks interesting. Let's zoom in. The high, the low, where was it? Where is it? Look at this. Down, up. Well, that's pretty good, isn't it? 1787. The 18s are going for 25. Well, that's nice if you like Macy's. TJ Moon, how you doing? Wrangler, I took a hit on SCMI with legal issues. Any thoughts? Not dividends, though. See, Wrangler, it's SMCI. Okay, I'm pretty sure it's SMCI. Let's take a look. SCMI. Okay, that's not the right one. Thank you for your time. This time, till next time. Thank you, Mudbone. Running gold. How does that work? Okay, running gold. Can you explain, please? Wrangler SCMI is not a stock, dude. Is it SMCI? Because that is a stock. SMCI is one. Okay, that's one that I don't do. Yeah. Sorry, yeah, my typos tonight, SMCI. Now, I feel bad about this, kinda, but not really. Now, let me explain why I say kinda, but not really. Because SMCI is not anywhere even close to being on my list. That's one of those companies that they ram down your throat and tell you buy, 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 but they don't tell you it sucks. Okay, look at this. Here's the high right there. Here's the bottom. Big ass drop. What the hell happened there? Well, let's take a gander at this. You ready? I definitely got to go to the other side. Oh, that hurts. Yeah, I probably shouldn't be playing soccer in my 60s. Anyway, okay, SMCI, here we go. SMCI. And, all right, so Wrangler, you see that? SMCI, Super Microcomputers, has no dividends. So I really can't tell you one way or the other on that one because it just doesn't make my list. Sorry. So I think we're basically done. You guys are out of questions. Breaking down covered calls, option stocks like Wells Fargo, got that one. So you guys are out of questions. I'm going to call it a day because, after all, it is my day. All right, anyway. Thank you, Randy. Hey, Jonathan, thank you for that. So, nothing else? All right. You guys are going to call it a night, and we'll do this all over again tomorrow. Cam, you have a great night. Ends up. Good night to you, too. Miss Rosa, good evening, Miss Rosa. And for you, too, Dr. Corey, thank you kindly for showing up. Till then, see you guys tomorrow. tomorrow, tomorrow, we'll see you tomorrow. You're always a day away. Ba-dum. The sun'll come out tomorrow, wipe away the cobwebs and the sorrow.